Here we have the daily chart for NIO Incorporated, stock ticker NIO. Here we can see that the stock seems to be caught in a bit of a sideways trading pattern, a bit of a consolidation pattern here. We can make some assessments based on that because overall, the current trading activity is really caught in its own sideways trading range that is forming at much lower levels when we compare the stock to its prior highs. For the most part, if we're looking at the stock's prior highs, we would really want to point to the August 23rd highs, which posted at 1618, which is a fairly substantial rally potential when we base the current share price of 451 in relation to these potential price movements. So overall, there is a fair bit of upside here, a fair bit of upside potential here that can be seen if we're able to form a base at these lower levels and start to see some breaks of resistance to the top side. So we have to look here at some reasons why that may or may not be possible. In particular, what I would want to point to is the fact that the momentum indicator on the relative strength index, this would be for the daily time frame, remember, is much more bullish in nature than it is bearish. As we can see here, there was a developing negative trend in share price trend momentum. That would be the purple line here, and then the yellow line would be the moving average of the relative strength index. But here we have an attempted formation of a trend that would signify negative share price momentum on the daily time frame. However, this broke relatively quickly, as we can see here. The relative strength index was able to break through this uptrend fairly quickly, and in addition to that, it broke above its own moving average. So that's this purple line crossing above this yellow line here. So those are both bullish signals, and then in addition to that, we have this longer term reading in the relative strength index, which also points in the positive direction. So, when you're looking for a potential reversal zone, the indicator reading is one of the first places you need to look. I mean, there are many situations where, the indicator itself will start to point to potential upside before you actually see upside in share prices themselves. For example, bullish divergence might lead to an upside reversal that completely precedes any upside movements in share prices. So, this type of thing does seem to be developing here. This type of scenario does seem to be developing here, where we do have a fairly strong bullish reading in the momentum indicator, and this is followed by some upside movement in the stock's trading volumes. As we can see here, for the most part, trading volume activity is more positive than it is negative. And that's encouraging because we're still trading at relatively sideways trading range. So this is another type of event that can precede future price movements, and this does suggest that we are more likely to see moves to the top side rather than moves lower. This doesn't try to predict the future or anything like that, but it just tells you that upside from here does look more probable than further downside. So, we have all these factors in place, and then we have to kind of take a step back here, and really look at this prior trend movement here. I mean, most of this downside activity has occurred in a very short period of time. We're really just going back to last August here. So this isn't even a full year of stock trading. Where we see these massive declines here. And we're currently trading at roughly 25%, just slightly better than 25% of the share value that was trading last August. So overall, the potential for upside here far outweighs the potential for downside. And if you look at the typical characteristics of a sideways trading range, what you tend to see is that when prices are kind of constricted like this, kind of bound by a tight range resistance and a tight range support, the moves from here tend to be quite forceful. I mean, they tend to move strongly in one direction or another after you see a final break in one direction or the other. I mean, this doesn't tell you which direction the prices will break, but it does tell you that there's a lot of energy building in the market. And eventually, when a share price break is seen, it tends to be quite forceful. Okay, so if we keep that in mind here, we have to understand that the range support level currently comes in at roughly $3.60. That's less than $1 away from current prices. It's about 90 cents away from current prices, so it's not far away. To the top side, what we have would be resistance to be found at roughly 605. Um, so roughly, a little bit more than dollar 50 to the top side, less than a dollar to the downside, and $1.50 to the top side. And that's just looking at this minor, shorter term trading range that we have here. So it's quite possible, of course, that we could fall back to the support level. If this were to occur, I would view this as a very strong buying opportunity, back to these 360 lows, uh, largely due to the fact that prices don't have much further to extend to the downside at that point. I mean, any trader that buys in at 360 is only looking at $3.50 of possible downside. I mean, if you're looking, in all possible realities here, if the stock were to just continue declining, the potential for downside is only $3.60. However, the potential for the stock's upside price moves far outweigh this. You could be looking at a share price movement to the top side, um, of $12, relatively easily. And I mean, because this isn't even a 1 year price move here, and that's not even going back, farther in history. I mean, you can see how small that price movement would actually be, if we were to go back to the highs that were really seen toward the beginning of 2021, when the stock was trading above $65 per share. So this large arrow here might seem large when we're looking at these shorter time frames here. But if we start to pull out, it really seems relatively easy to attain these levels. It doesn't seem very difficult to reach this point. The potential for upside currently, even if we're just using this 1 year trading period, as a possible range, you're really looking at a very strong risk to reward ratio, because you've got roughly $12 in upside, and then possibly $3 to the downside. And those are being relatively conservative. And this is an outlook that would be supported by the daily indicator readings. So as long as we can break above this 605 mark, I do expect to start to see some upside here, because at that point you would have broken above all of the major exponential moving averages, even most likely the 200-day exponential moving average, because this blue line here is declining rapidly. So if we continue to decline here, and then we break above this 605 level, we would have invalidated almost every near term resistance zone that would set share prices back on a target to first test this 970 level, and then this would be followed by the next test of resistance, which would come in at roughly 1620. So here's the current market outlook for NIO stock, ticker NIO.